Hi guys, welcome to a new episode of your IGCSE Tutors. Today, I will be discussing this Cambridge IGCSE Accounting Paper 1. First question. How does a trader use the information provided by the financial statements? So, this trader means business owner. And financial statements, there are two, referring to income statement and SOFP, statement of financial position. First, to calculate amount of cash drawings taken, no. To calculate the amount is owed by trade receivable, no. To check the balance shown on a bank statement, also no. So for D, to compare the business performance over a number of years, correct. Because what they're comparing is profits, like profits or loss, which is calculated in the income statement, and you also compare asset, liability, capital, okay? So you can compare the business performance. D is the correct answer. Okay, question 2. The balances remaining on the books of a business after the preparation of the income statement including the following. What is the total of liabilities? So for this total of liabilities, you need to use this formula, which is total liability equals to non-current liability plus current liability. Or usually, you can use this formula, asset equals to capital plus liability. But in this case, we didn't see any capital or asset, so this formula is not needed. You just have to use the first one, use this one. So first one's correct, it's non-current liability. We just do correct. This is a accrued expenses, which is the wages that you haven't paid, so it's current liability. Rent prepaid, no. This is a prepaid expense, so it's a current asset. Trade receivable, no, this is a current asset. Trade payable, yes, it's a current liability. Motor vehicles, no, it's a non-current asset. Provision for depreciation of motor vehicles, no, this is the expenses in income statement. Okay, so we just have to add up this, and this. So you get a total of 15270. Okay, question 3. Jamil's financial year ends on 31st December. On 1st January 2021, he brought down a debit balance on his stationery account. What does this balance represent? Okay, so for this stationery account, you can refer to this. So what it means, the balance means the yellow part. Okay, because it says a debit balance, and this one, 1st January, we know that it's opening because year end is 31st. So this is 1st January is the opening balance, and it's debit side. And how do we know this is prepaid? Because stationery is an expenses. Okay, it's an expense account. If it's credit side, then it's accrued expense. First, amount owing for stationery on 1st January, no. This should be credit balance. Okay. Amount paid for stationery, no. This is bank, under bank. Cost of stationery used during 2020, no. This is the SOPL. Last one, inventory of stationery on 1st January 2021. So when you see inventory of stationery, it always refer to prepaid expense. So we know that this is the correct answer. Question 4. Alex issued credit notes in August and entered them in the correct book of prime entry. How was the total of this book of prime entry recorded in the nominal ledger at the end of August? Okay, So first one, I need to know Alex is the supplier. How do we know that? Okay, so the key point is here, issued credit notes. So for issued credit notes, the first point we need to know is that only supplier can issue. And second point, supplier issue to who? Issues to customer. And the third one is the purpose. Why does supplier issue credit notes? The purpose is to reduce the amount owing by customer. So when you see a reduced amount owing by customer, this can means that the supplier overcharged the customer. Okay, so the correct book of prior entry is sales return. The customer return goods, and then the supplier issued credit notes to reduce amount owing. For example, initially the customer bought $10 of the goods, and then it returns $2 of it. So the supplier need to issue credit notes to reduce the amount owing by customer to $8. Yeah, this is the logic. So how was the total of this book of prime entry? Recorded in the nominal ledger. Nominal ledger just means general ledger. It's the same thing. At the end of August. Okay, so we need to open up account to see. So first one, sales return journal. This is the first step. Okay, so I'll put A and B is the customer. So imagine A returned $2 of goods, B returned $3. So the total for the month is $5. Okay, so step 2. We need to post the total of sales return to general ledger, sales return account. Okay, so we know that sales has a credit nature, so sales return has a debit nature. So we debit to this. So we write sales return journal. So the answer is the total debited to the sales return account. So this is correct. Question 5. Which business documents are used as sources of information to make entries in the cash book? So cash book, it consists of cash and bank. Before looking into the answer, I prepare a notes for you to refer. So these notes are the 6 business documents mentioned in this question. The first one is about the definition, and the bullet point is about the purpose and uses of it. Okay, so let's see the answer. 5. Okay, bank statement is correct. Check counterfoil. Invoice is not. Paying in slip, yes. This one correct? Correct. No. Correct. Correct. Yes. So C is the correct answer. Okay, question 6. What is the double entry for recording a check payment to a credit supplier? So check payment to a credit supplier, your money is going out. Credit bank is correct. Debit purchases ledger account because it's a credit supplier. So C is the answer. 7. A bookkeeper made 2 errors which cancel each other out. Which type of error did he make? So when you see that there's 2 errors cancelling each other out, this is compensating error. So complete reversal means that you use the correct account and correct amount, but it's at the wrong side of account. So means that, for example, cash sales, it should be debit cash and credit sales, but you wrongly debited to sales and credited to cash account. Error of original entry, it means that a wrong amount is recorded in the prime entry books from documents and posted to the accounts. For example, sales invoice is $100, you post to sales journal as $10. So this is wrong because it affects the sales account later and sales ledger. Error of principle, it means wrong class, wrong account but correct side of account. For example, you pay a rent expense, but you wrongly debited to the building account. Okay, question 8. The totals of a trial balance did not agree and 200 was debited to the suspense account. The bookkeeper then checked the books and found the following 2 errors. Okay, so the first step is open up a suspense account. And we know that the balance is at the debit side because it says 200 was debited to suspense account. So we write down the balance first. This is the first step. Okay, let's see the first error. Sales invoice for 700 had been recorded in the sales journal as 770. Okay, so first one, we know that sales journal is overstated by 70. Sales ledger also overstated by 70. Okay. So first one, you know that sales invoice affects both sales ledger. Sales ledger is the customer account and sales account. Okay, so first, let's see the error first. Error 1. Okay, for example, your customer called Ali, and then you recorded as 770. This is the error. Okay, so the total for the month also wrong. Recorded as 770. And then your sales ledger, you will debit as 770. Next is general ledger, also wrong. Sales account, you credit 770 because you take from this figure. Okay. Okay, however, we see this one is all wrong. So what is the correction? Now you overstate 70. So you need to remove it by first debit sales account. Okay, this is your correction. Debit this one. And then you credit Ali's account. So okay, right now we see after your new balance, your new balance is 700. Okay, this is correct already. So this first error, it doesn't affect suspense account because this error impacts the specific accounts, which is sales account and sales ledger. So it does not cause a difference in trial balance. Okay. So first one done. Second, error 2. The sales journal had been totaled incorrectly. Okay, let's see error 2. This is the working. Okay, remember the suspense account, the difference is 200. So it means that this totaling, it will be totaled by a difference of 200. So A, B. Let's say 100 and 200. The total should be 300. However, maybe you make a mistake. So you total as 500. So you overstate 200 total for the month. Okay, and then you post to the general ledger sales account wrongly. You post as 500. So how do we correct the error? This is overstated sales account by 200, so we need to debit. So we debit sales account, credit suspense. Credit suspense. Okay, so this is the correction. Error 2 affects suspense because it causes the difference in trial balance. So we know that it's overcast by 200. Question 9. A trader took some goods from the business for his own use. He credited the purchaser's account with the cost price of goods 200 and credited the sales account with the selling price 300. So took some goods from business for own use. This means drawings. Okay, first one, open purchaser's account. He credited 200. Yeah, this is correct when you took goods. But he doesn't debit drawing. Okay, so we wait first. Now we just do the error part first. Sales, he go to credit 300. So this is correct, but this is wrong. So how do we correct this error? First, we need to debit out this sales because it is wrong. But where do we credit? Is it drawings? No, it's not drawings. So we need to open a suspense account. Transaction is always a debit credit nature. So when you debit, you must credit. So we credit here sales 300. Okay. And drawings, we need to debit 200. However, the purchasers already credited. So we need to credit suspense. So it's 200. Okay, so the total here, the balance is 500. Okay, so let's see. Sales and drawings. Debited is correct. Suspense 500. Credited. Yes, it's correct. Question 10. What would result in a cash book balance being lower than the bank statement balance? Okay, so for this to happen, let's see the updated cash book, which is shown here. Okay, so for the cash book balance to be lower, usually cash book balance is at the debit side. Unless if it's overdraft, then it's credit lah, but we usually will talk about the debit nature. For it to be lower, your credit side must increase and you must reduce the debit side. Okay, because you reduce the amount here. And then for the bank reconciliation statement, in order for bank statement to be higher than cash book balance, you must, for this uncredited deposit, you must be lower, or your unpresented checks must be higher. This 400 and 200 is just an example. And a check received from customer was not recorded in the bank statement. Okay, so the effect of the error is that bank statement will be lower. So this is wrong. Okay, because your cash book balance will be higher. Because you received a check, your money coming in your cash book balance recorded, but bank statement haven't. So bank statement will be lower. Second, a customer check dishonored by the bank appeared only on the bank statement. Now, cash book balance will be higher. So this is also wrong. Because at your cash book, you thought that the customer already paid you. So you will debit your cash book balance. However, it is check dishonored, means the check bounced back because maybe due to the insufficient fund in customer bank account. So actually, you haven't received the money. So bank statement, it will remove the amount, but your cash book balance already recorded and haven't made adjustment, so your cash book balance will be higher. C. Payment by a customer directly into the bank was not recorded in the cash book. Okay, so it is correct because cash book balance will be lower. This part will be lower, so it's correct. Okay. Payment of insurance by standing order was not recorded in the cash book, so your cash book balance will be higher. So it's wrong. So actually, the bank already helped you to pay. Standing order is like you pay your insurance. It's an expense. So standing order, you let the bank take control. So bank will help you to pay this amount of expense of insurance every month. But as a business, you haven't recorded it in your cash book. So obviously, when you didn't record your expense, then your cash book balance will be higher. So C is the correct answer. Question 11. The bank statement of a business showed a credit balance of 280 on 31st December. Okay, so whenever you see bank statement is a credit balance, it is an asset. So it is positive. Why? Because at the business cash book, when you have money in the bank, right, you have the debit nature. So bank statement will be credit because the bank owe you money. As the business deposit money into the bank owe you, right? So we know that, okay, the business have the money in the bank, so it's an asset to the business, right? At that date, there was unpresented checks of 312, a standing order of 220 had been incorrectly entered as 22 on the bank statement. Okay, we know that there are $2 is being over deducted. Because standing order is an expense, a payment, for example, you pay for insurance, the bank help you to pay for insurance every month. So it will debit it. Okay, debit. However, the bank should debit 20, but it instead debited 22. So the $2 extra, bank over deducted already. So it can be said as over deducted or over debited. When you deposit money into the account, it's credited. Okay, and if you withdraw money from bank account, then it's debit. So we can say that it over withdraw, so it's over debited. Let's do the bank reconciliation statement first. Start with balance as per bank statement. Okay, 280. It's positive. And usually here we'll write uncredited deposit, but in this case we don't have. But we need to add back because it's a bank error. This is regarding for the second error 2. Bank error over debited. So we need to add back the $2 and must remove unpresented check. Okay, 312. Okay, so after this we got balance as per updated cash book. Okay, we get negative 30. So it is represented by a bracket. Okay, let's draw our updated cash book. So if it's positive, it will be debit cash book, but now it's negative. Okay, so there's a overdraft. So it's credit side. Balance BD 30. Okay, so it's credit 30 credit. Yeah. So A is the answer. Okay, question 12. A business keeps a complete set of books of account. What is not used as a source of information for making entries in control accounts? So control accounts, you need to know what are the accounts recorded inside. Okay, so cash book correct because it record bank or cash. General journal correct because control account there's irrecoverable debt or like contra. Purchaser journal yes because it tells you the total purchases. Sales ledger, no. Instead, the control account, they will take from sales journal. It's like purchases journal lah. You take purchases from purchases journal, you take sales from sales journal. Okay, so this is not used. B is answered. Question 13. Which item would not appear in the purchases ledger control account? Okay, contra, yes, you will have. Discount received, yes. Interest charge, yes. So this contra entry is at the debit side. Discount received, debit side. Interest charge is credit side. Okay, return inwards, no. Return inwards is, another words, sales return. It should be recorded in sales ledger control account, SLCA. So D is the answer. Question 14. The cost of repairs to machinery was debited to machinery account. What is the effect of this error? Okay, so now cost of repairs, you didn't record, so your expenses is understated. Debited to machinery account, the machinery is overstated and machinery is non-current asset. So it's non-current asset overstated. Okay. Now we know that non-current asset overstated, this is correct. Profit, how about profit? Because now your cost of repair reduces, so your expense reduce. Expense reduce, profit increase. So your profit overstated. So A is the answer. Elsevier purchased a motor vehicle costing 8,000 on 1st January 2018. It is depreciated at 40% on the reducing balance basis. Which journal entry records the depreciation for the year ended 31st December 2019? So first, let's see the year end. There's how many year? Okay, this is the cost you purchase, and then depreciate at 40%, reducing balance. So this is based on net book value. Okay. 1st Jan 2018 to 31st December 2018, first year. So we see that there's in total 2 years here. Okay. The question asks you to calculate the depreciation for this year ended. So depreciation for year 2. So how do you calculate? You can use this formula. You use the net book value, year 1, times the depreciation rate. We know net book value is using cost minus accumulated depreciation. So you can use this method. However, I'm using a faster method. You use cost times with this 0.6 and then to the power of 1 because 1 year times depreciation rate. So I also got 1920. This is the faster method. If you do not want, you can use this also. You'll get the same answer. Okay, so let's see. See net book value year 1. Cost 8,000. Accumulated depreciation. So you get 4,800, and you can use this 4,800 times with 40%. Then you get 1920. Okay, so this is method 1 and this is method 2. You also get the same answer. So okay, debit income statement, credit provision for depreciation of motor vehicles. Depreciation has a credit nature. Remember this. Question 16. A trader sold one of his vehicles. What is the journal entry to remove the total depreciation on the vehicle sold? So this is about disposal. you need to know about this format here. So it's at the right hand side. Okay, so let's see this question. Okay, so it's about provision for depreciation. Yeah, you know that debit side, you should debit provision for depreciation and credit disposal. So D is the correct answer. 17. Why is it important to match costs and revenue? Okay, so this is the matching concept. Or it's called accrual basis concept. Okay, first, so that every debit entry has a corresponding credit entry. No, this is the dual entry dual entry. No, it doesn't refer to the matching concept. So that business does not incur any losses. No. Enable a better comparison. Yes, of profit from year to year, because you must keep it consistently, so you can have a comparison. Ensure that bank balance is accurate. No. So C is the answer. Question 8. The Ventra prepared the following journal entry. Which statement is correct? So debit recover debts, credit Tobias. Daventra, so we know Daventra is the supplier, and Tobias is Daventra's customer. So what is correct? Daventra has provided for doubtful debt. No, it's irrecoverable debt. Daventra has received amount due from Tobias. No. Tobias cannot pay the amount due to Daventra. Yes. C is the answer. Okay. 19. Alex purchased goods costing 1,000. She planned to resell the goods at markup rate of 25%. These goods were unsold at the end and were found to be damaged. Alex estimated that they could be sold for $600. What value should be shown for these goods in the year-end financial statements? So this is about the value of inventory. You need to follow this basis: lower at cost and net realizable value, NRV. So right now the cost is 1,000. You don't have to bother about markup because this is the selling price. Then net realizable value, it says estimated that they could sold for 600 after some damage. So you always value at the lower one, which is 600. This is correct. Unlimited liability is one of the disadvantages of operating as a sole trader. What is the correct explanation of unlimited liability? Cannot take a bank loan? No. Has to manage the business alone. Yes, it's correct, but it's not referring to unlimited liability. So trader cannot use their private funds to repay business loan. No. So trader may lose both their business and personal funds. Correct. This is the answer. Because business owner must use their personal fund to pay for business debt. So the owner and the business are not separated. Business owner must pay the business debt using the personal money. 21. Which item is a current asset? Bank overdraft? No. Current liability? Loan repayable? No. Current liability, 12 months. Prepaid income also current liability. So we know it's work in progress. But why is it work in progress? Because work in progress includes the raw material costs, labor costs, and overhead costs. They are not completed. So they are all part of the company's inventory. So we know that inventory is current asset. So this is correct. Question 22. Where is the interest on drawings entered in the accounting records of a partnership business? So again, you need to refer to the format beside. So let's see current account. Okay. Debit side is interest on drawings, share of loss. Credit is interest of capital, share of profits. And for profit and loss appropriation account, is to record how the profit and loss are distributed among the partners. So at the debit side, you have the interest on capital, partner salary, share of profit. Credit side is profit for the year, interest on drawings, and share of loss. So let's see, interest on drawings. Where is located? Okay, first is debit side of current account. Debit, correct. And credit side of appropriation account. Here. So this is correct. And there's no entry in capital account, is correct. B is the answer. Okay, question 23. T Limited was formed on 1st April 2019. A total of 220,000 shares of $2 each were issued. Okay, and shareholders were asked to pay 75% of share value immediately, 25% on 1st April 2020. Okay, so by 1st June 2019, holders of 190 shares had paid the amount due. What was the paid up capital on 1st June 2019? Okay, so before that, we need to know there's a different type of share capital. Okay, let's see. The first one, authorized share capital. This is the total shares authorized by the company. Second, issued share capital. It means that these are the shares that are sold. Third one, call up capital. The amount company asks shareholders to pay. And fourth is the paid up capital, the actual amount received by the company. Okay, or you can say the actual amount paid by the shareholders. So the question is asking you about paid up capital, which is referring to this thing, actual amount paid by the shareholder. Okay, so right now we see, okay, 190,000 share already paid. So you take this times with one share cost $2. However, it's not everything. Shareholders not pay 100%, it just pay 75% because it says this is immediately, but this 25% needs to be paid on 1st April 2020. However, right now it's only 1st June 2019. So they haven't paid. You just have to times 75%. So you got an answer of 285,000. Okay, so A is the answer. So whenever you get this kind of question, you need to remember this, and then you interpret what the question wants. Okay. Question 24. Which items will appear in the statement of changes in equity of X Limited for the year ended 30 June 2020? Okay, refer to this format beside. Okay, let's see. First one, interim dividend paid on 31st March 2020. We need to see the year ended first. And this is interim. Interim is this year, 31st March. Do we see here? Yes, correct. Second, proposed dividend for the year ended, no. Proposed but haven't paid, it will be recorded in the statement of changes in equity. Third one, proposed final dividend for the year ended 30th June 2019, paid on 31st October 2019. Yes, it paid already. Paid before the year end, then it's correct. Okay, transfer to general reserve on 30th June 2020. Yes, you can see here. Here, so correct. Answer is 1, 3, and 4. Okay, question 25. A company's financial year ends on 31st March. On 31st March 2021, trade receivable were 45,000. On 31st March 2020, trade receivable were 41,000. And the recoverable debt of 1,000 is yet to be written off. Not yet, not yet. Written off at 31st March 2022. Provision for doubtful debts is to maintain at 5%. What is the effect of the irrecoverable debts and adjustment to provision for doubtful debts on the profit? Remember, it's 2. Okay. So first, let's calculate the provision for doubtful debts balance at the start of the year and at the end first. So at the start of the year's April 2021, end is 31st March 2022. So this is the opening trade receivable, and this is year end. Okay. Closing. Provision for doubtful debts. You will use 45,000 times with 5%. So the balance you got 2250. And then for the for the year end, it says that irrecoverable debts haven't written off. So you need to use 41,000 minus 1,000. Then you times with 5%. Okay? And you got 2,000. Alright. Okay, but this you haven't ended. We need to see the effect first. So it's asking you the effect of irrecoverable debt and the adjustment of provision for doubtful debts on the profit for the year ended. This means it's the effect on income statement. Okay, income statement. So first, there's an increase in irrecoverable debts. So your expenses increase. Okay, so your profit reduced, right? So you minus 1,000. Okay. Second one. You see, from here to here, your provision for doubtful debts reduces, right? When this happens, your other income increase. Profit for the year increase. Oh yeah, this one is profit for the year reduces. Increase, so positive, 250. Because we take the differences from 2250 minus 2,000. So you got 250. Then what's the total? Use minus 1,000 plus 250. You got minus 750. Okay, we know that this is your profit decreases by 750. This is the correct answer. 26. A club receives subscriptions from members totaling of 1,600 in the year ended 30th April 2019. Okay. Which amount appear in the income and expenditure account for subscription for the year ended 30th April 2019? Income and expenditure. This club's account. So this one is bank. You receive subscription. So your subscription is your club income. Okay. So when it's income, if it's paid in advance, this is current liability. Arrears is current asset. Okay, remember this is start of the year, 1st May 2018. Okay, so let's open a subscription account. Then it's easier if you draw the account so you can see it clearly. Okay. First brought down the balance, opening balance, current asset 800. Okay, credit side 1,300. Okay, so bank, you receive 1,600. This is what the club member pay. And then your balance CD 1,100. Okay, because balance BD is here. This is a current asset. Okay. Okay, so right now we want to calculate what's the income and expenditure. So you just total up everything. So total is 15,000. Okay, and then you got 1,200 here. This is the correct answer. Just draw the account, then you can get it. Okay. 27. Which statements about the accumulated fund of a society are correct? So the accumulated fund is like equivalent to capital in the company's account, in company or sole trader. Okay. But in club we call as accumulated fund. First, surplus will increase the accumulated fund and deficit will reduce it. Correct. It includes all monies received and paid during the year. No. Okay, because it's adjusted. They will match the revenue to the cost for the year ended. Members cannot make drawings from the accumulated fund. Yes, correct. Because they're just members. Unless you are the club owner, then you can make drawing. Fourth, accumulated fund is shown as an asset in the statement of financial position. No. Wrong. So first 1 and 3 is correct. Manufacturing company. What was the prime cost of the manufacturing? So prime cost. Okay, this one you just need to know the format. And prime cost only include direct expense only. Direct expense means the expense involved in production. Okay, so cost of raw material is correct. Direct wages, yes. Machinery depreciation, no. Factory supervisor salary, no. This indirect expense. Factory rent, no. Indirect. Machinery repairs, no. So only the first and second, you just add up and you got 261,100. Okay, 261,000. 29. Stamps work in progress was 6,500 at the start of the year and 1,200 at the end of the year. When Sam prepared his manufacturing account, he forgot to make the adjustment for work in progress. How did this omission affect the cost of production and gross profit? So this omission means that this question wants you to see what's the effect of this error. Okay, this is supposed to be the correct one and this one is the wrong one. Okay, just put this first. And then the format tells us you need to plus opening work in progress. So you just plus. Okay, plus. And then you minus closing work in progress. Minus. Correct one should be minus this. And then, however, for the wrong one, you forgot to minus it. So what's your cost of production? Got 5,300. And then this one is 1,6,500. Okay, so our conclusion is that originally, so the correct one, your cost of production should be lower, and the wrong one makes your cost of production increase. Okay, so but this question is telling us to find the effect of error, right? So let's just focus on this part. Let's just focus on this. We analyze these results. Your cost of production now is overstated. So your expense overstated. So what happened? Your gross profit will be understated. Okay, so A is the answer. So for this kind of question, you can plug in random figure, but it must be applied logically lah. You cannot put the wrong one. And then you can see the effect of it. Okay. Question 30. Roshan's sales for his first year of trading. First year of trading, remember, no opening inventory, were 55,000. His gross profit margin was 20%. The closing inventory was 3,200. Okay. What is the purchase for the year? The formula is gross profit over sales times 100. You got 20%. Or the another one is cost of sales divided by sales times 100. You got 80%. Okay, but in this case, we just use this first. Then we find the gross profit. Got 20%. Okay, so the answer you got, gross profit, remember, is 11,000. We can draw up the income statement. So sales, it says 55,000. So we write here 55,000 less cost of sales. Purchases, we don't know how much, and then we can less closing inventory because it doesn't have opening inventory. Okay. And we already know the cost of sales is 44,000. Okay, because using this formula, and gross profit is 11,000. Okay, so we just need to find what is the purchases. Alright, so you use 44,000 plus 3,200. You got 4,700 and 200. Okay, so this is correct. D. Okay, Miriam does not maintain a full set of accounting records, only the purchases for the year, and asset and liability values at the year end are known. Which financial statements can be prepared using this information? Income statement and statement of affairs, which means same as SOFP. Okay, income statement of course cannot already because you only have purchases. Your income statement have a lot of things. You have sales, you have cost of sales, so you cannot record. Statement of affairs can, because you have asset and liability, so you can calculate your capital. So this one's correct? Correct. C is the answer. 32. What was the rate of inventory turnover for the year ended 31st December 2020? The date is very important. Okay, so this is the start of the year and this is year end. Okay. Okay, this is also the same as 1st January 2020. This is also same as 1st Jan 2020. So for rate of inventory turnover, the formula is cost of sales divided by average inventory. But this cost of sales, you need to find the year end one. So year end is this one. So we take this. Okay, divide by average inventory. Average inventory is opening inventory plus closing inventory divided by 2. So we take opening. Opening is this. This one is closing. So this divided by 2. And then we get 20. This answer. Okay. Miranda's gross profit fell from 25% year 1 to 15% in year 2. What may have caused this? So here are the 4 top reasons why gross profit, our gross margin fell. So for example, the selling price reduces, so the sales may reduce, and then the gross profit will reduce. Okay, cost of production increase. Or cost of purchase means your purchase is increased. This will increase your cost of sales. Okay, and then this reduces gross profit. And then opening inventory will increase your cost of sales, so also reduce your gross profit. And then your closing inventory reduces. This will increase your cost of sales. Yeah. Okay, and then your gross profit reduces. Let's see the answer. Miranda paid less for her purchases in year 2. No. Should we pay more? Miranda purchased fewer goods in year 2. No. C. Miranda reduced her selling price in year 2. Yes. Miranda sold fewer goods in year 2. No. Because B, the answer, it may be, okay, it sold fewer goods, but its selling price increases a lot. Then the gross profit will still increase, right? So D is not answer. Ralph wants to compare the accounting ratios for his business with the accounting ratio of his brother's business. What will prevent Ralph from making a meaningful comparison? So there are these 4 reasons why a business cannot compare its accounting ratio to another. is because of different size. So like big firms cannot compare with small firms. Different trade or industry. For example, restaurant cannot compare to a hospital. Different type. Sole trader, different sole trader, partnership, limited company, different accounting policy. Maybe, for example, one company is using straight line method for depreciation, another is reducing balance method. So it's different already, you cannot compare. So D is correct answer. 35. Which statement correctly describes the principle of realization? So realization, you need to remember, is when the ownership is passed from the business to the customer. So C is correct. Profit is earned when the goods are supplied and ownership passes to customer. Correct. C is correct. So here's the end of our video. Hope you find this helpful, and if you have any questions, please comment down below. Don't forget to like, share, and subscribe. See you in the next video. Bye!